how are startups impacting, the overall business function?
New York's New York. There's startup hedge funds here. It's a pretty standard, staple, emerging business. I think that will always have its place here in New York City. We're based in Dallas, Texas. I would say the majority of our business, 80% or more over the last 24 months, has been private equity. Texas is a very hot real estate market. Until recently, there was a ton of activity in the oil and gas space, and even now there's still emerging managers in that space because decline in oil prices makes buying opportunities for new fund managers. So we're seeing a lot of very high-profile spin-outs on the private equity side of the business.
Peter, this is another one of those that every business it impacts. You're worried about losing your star employee, or you lose your star employee. What can a fund manager do to, what are the hiring trends, the compensation trends that you're seeing that allows any fund manager or anyone to stay competitive?
So I think the biggest mistake that fund managers make when hiring and trying to retain and attract top people is they think that if they throw money is the great equalizer. And the truth of the matter is it's a misconception. Money will cover up a lot of the shortfalls in a situation, but at the end of the day, people that are unhappy, money doesn't buy them happiness, which is the old adage. I think what companies are starting to learn a little bit, what candidates want when they look for a job, and what they want when they want to remain in the job, is they want to really feel ownership of something. Clearly compensation becomes a piece of that, but it's also about having a meaningful role at a company. One of the biggest mistakes, just to kind of go back to and then we'll kind of lead up to it, that I see in client after client at all levels, from the startups to the mega houses where they have 500 to 1,000 employees. They don't have a realistic view of who they are, and therefore they cannot offer their employees a realistic view of what it's going to be. So they'll, there are clients that say, look, we're we're an A+ firm, we're only going to hire A+ candidates, and realistically the market views them as a C+ firm, and no A+ guys want to go there unless you're going to triple their pay. And those things, if they're not in congruity, clearly it doesn't work. The scenario you presented where a star leaves, the truth of the matter is if a star is going to leave, that's what they're going to do. That's how every manager started themselves. You can't hold them up. You can't hold them back. The other mistake they make is they try and put these artificial restraints on somebody. These 2-year clauses where you can't the non-competes, or where you're paying somebody out, and all these deferred issues where it takes them 10 years to become whole on something, where when they're 112 they can go out and look for a new job. Clearly these things are trends which are kind of going away.